Hey everyone, it's Mark Ferguson with Invest for More, and we're back with another real estate video. Today we're talking about cap rates, how to figure them, and we're talking about different types of cap rates, and I'll show you some examples with some of my properties as well. Now, if you came here just to get the very fast, quick cap rate formula, I'm not going to make you wait around for minutes or hours or days. It is right here. That is the basic cap rate formula, so if that's all you need, go ahead, get out of here. But we do appreciate a like on the video. All right. We do love the likes, comments, shares. I have lots of other videos of my properties, walkthroughs on commercial properties, residential properties, our businesses, and lots of advice videos too. So hopefully you stick around for those. Now, cap rates can be very complicated. They can kind of be very confusing to some people, but they're actually pretty simple once you figure out how they work and how they're figured. So right now, I'm on my blog, investformore.com, and this is an article that talks about what is a cap rate, how is it calculated. And it goes through all the details there. It's just investformore.com dash rate, or just search for Invest for More and cap rate. It'll pop right up. But this is the basic formula for cap rates. And I have a calculator on my site as well, if you want to go that route, that is right here and is very, very simple for you too. So lots of options there. But basically the cap rate is your net operating income on a building divided by the value of the building or what you paid for it. Depends on how you want to figure it. But usually it's the current market value or what you have the property for sale for. That's what your cap rate is. So you can kind of figure out what the cap rate is, or you can figure out what your market value should be based on what going cap rates are in your area based on a certain property. So there's a lot of moving parts. This equation itself is very, very simple, but figuring out what that cap rate is, if you don't know that, can be difficult. Figuring out the market value can be a little tricky, and figuring out net operating income can be tricky as well. So this one right here is your net cap rate, but sometimes people use gross cap rates too. So there's a lot going on. So first off, we'll just do a real simple cap rate calculation, and we'll go to my calculator to do that. So again, investformore.com, cap rate calculator, very easy to find that. I have lots of other calculators too, and we just made an inflation one. I'll show you here at the end. I did a video on inflation, and I think it's probably one of the best inflation calculators out there. So I'll show you how it works here after we go through cap rates. So here's very simple. If you know what the property's value is, let's say the property's worth $500,000, you can type that in. And if you know what income the property brings in, so this is annual net income. So gross means that you're not deducting any expenses, right? If it makes $100,000 in rent a year, that's your gross rent. Net rent or net income is after deducting expenses. If you deduct your property management, your property taxes, any maintenance, repairs, that's your net income. So the first thing to know when you're doing cap rate is make sure that you're doing either gross or net income correctly, because some people figure gross and some people figure net, and they can be two very, very different numbers, and I'll show you that here in a second. So if you have a $500,000 building and the rent is, I'll get out my calculator just to make this easy for you, let's say $4,000 a month. You multiply that by 12, you get $48,000 a year as your gross income. Now you could just type that in, 48, and it will tell you right here, look at that, that's fancy. Your cap rate is 9.6%. That's a gross cap rate though. Now if you wanted your net income, you'd have to take this 48,000, subtract whatever your utilities are, maybe subtract your property management fees, subtract your taxes, anything the landlord pays, and now you have, let's say you're actually making $34,000 a year. So if you're actually making $34,000 a year, now your cap rate's 6.8. This is your net cap rate, whereas the previous one was your gross cap rate. So that's the first thing, is it's important to know which one you're doing. Again, gross is without taking out any expenses. Net is after you take out all the expenses you're supposed to take out. Now, if you see properties listed and they're telling you what the cap rate is. Say this property's for sale for $500,000. They say it's got a 9.6% cap rate. There's a good chance they might be talking about gross cap rate. They might not be taking out any of those expenses, or they might be taking out some of the expenses, but not all of them. They might be accounting for taxes and insurance, and that's it, but not accounting for any property management or utilities or other things that might come up. So it's really important to know if you're serious about cap rates, you're really trying to dial it in, and you're looking at a property that's for sale, what expenses are they using for their cap rate? Don't just blindly trust they're actually giving you the real numbers. And that's one reason why a lot of people, including myself lately, have been looking at gross cap rates more, because you see kind of what the actual, income, total gross income coming in is versus the value of the property. And that gives you a real high level idea of the value of the property, of the cap rate. And if you think it's a decent number, then you can dive into the expenses, see if they're normal, if they're out of whack, what's going on with them. So in my area, this can get tricky too, cap rates vary based on the type of property. So something else you can also do here is we can eliminate that property value, and we can just say, we're just going to assume it's gross income for right now, even though it says net there. A property brings in $100,000 of rent a year. Right? We're not deducting expenses, not doing any of that. We're just going to try high-level cap rates. Well, in my area, gross cap rates tend to be 7 to 8% depending on the property. So if the property has a 7% cap rate and it brings in $100,000 a year gross, and we're using gross cap rates, that means it's worth $1.4 million. See how that populates when you do that? You just need two of these values and it populates the other one. Now, what if it's 7.5%? Enter 7.5. Now it's worth 1.3 million. Okay, what if it's 8%? Oops, not 78%. That would be crazy. Now it's worth 1.25 million. So that's something else people often get confused with. The higher the cap rate, the lower the value of the property, or the more money it makes based on the value of the property. So if I'm buying property as a real estate investor, I want to get properties that make a lot of money. The higher the cap rate, the better as far as the percentage of rent coming in per the value of the property. Now, that doesn't always mean the property's better. Sometimes there's reason for higher cap rates. They could be in challenging locations or have other issues, or maybe they're projected rents, right? Sometimes you see properties for sale and they say, oh, this is selling at a 8% cap rate, but they're projecting the rents. It's not actually rented, it's vacant, and maybe they're a little wishful in their thinking about what those rents could be. So there's a lot of things to think about here. Now, in my area, like I said, gross cap rates tend to be 7 to 8%, but net cap rates, if we're deducting all the expenses from the cap rate, tend to be 5 to 6%. So if this property actually makes $100,000 after expenses, so you've deducted all the expenses, and you're selling it for a 5% cap rate, that makes it worth $2 million. Now, if it was a 6%, that makes it $1.6 million. So you can see there's a huge difference between a 5 and 6% cap rate, and that's where either your market knowledge, a commercial broker's market knowledge, another investor's market knowledge comes into play to try and figure out or know what market cap rates are. I'm in Colorado, northern Colorado. If I was in Los Angeles, if I was in Denver, this same property that sells here at a 6 cap might be a 4 cap because there's more demand there, there's more people, there's more investors willing to pay for that property. That makes it $2.5 million, worth $2.5 million based on the same income. Likewise, maybe we go to Ohio where they have much higher cap rates and a 10% cap rate isn't unheard of. That makes that same property worth $1 million, right? So you've really got to know your own local market, what cap rates are for different types of properties. So I say that because, right, a college rental might have a different cap rate than an industrial property. A 100-year-old dairy, that's not in good shape will have a different cap rate than a 5-year-old brand new commercial building, a 7-Eleven, something like that. And then the types of leases will also affect cap rates too. If I've got a month-to-month cap rate with a mechanic, maybe that's an 8 cap. But if I've got a 20-year lease with a Wendy's, the hamburger stand Wendy's, that could be a 4% cap rate. So there's massive differences between the type of lease, the type of property, the condition of the property, the age, the tenant, all of that. And that's where kind of the market knowledge of professionals in your area or investors comes into play on knowing what those cap rates are. Now, why is this important to know? Well, obviously, if you're investing in a property, it's really good to know what you might be able to sell it for, right? This kind of gives you an idea of what the value is, what you could sell it for, what you could refinance it for if you decide to go that route later on. And my strategy with some of my properties, and we can look at some of my properties here on my channel, like I said, is to buy properties like this is.
Overall, I think things are good.
Sorry. A liquor store, mini mart, an apartment building I bought. And so that was trickier because it came with the business and the apartments. And usually you should value the business separate from the building. Sometimes they're valued together. But my goal is to buy properties that say, let's see, I bought this one for $605,000, and let me see here. It was bringing in, when I bought it, whoops. I was clicking the wrong button. $1,650 a month in rent, which seems absolutely crazy because you multiply that. That's $19,800 a year. And if we bought it, let's say it just be 8 cap in that area, that actually means it's worth $605,000, which, wait, hold on. That's not right. There we go. I'm like, what's going on? It's because I typed in all 3 numbers. You have to leave one blank. That means it's worth $247,000. Why did I pay $605,000 for it? Well, because it had 1 unit vacant. The liquor store, the mini mart, weren't paying any rent to the property. So if we take that number, we had $1,650 before. Now we add another unit being rented. Now we add rent that the mini mart liquor store is paying. Now we have $5,100 a month. We multiply that by 12. We've got $61,800 a year coming in. Now the property at an 8 cap, this is gross cap, is worth $772,000. That's why I bought the property for $605,000, because you're able to add value by adding income. And this doesn't even count the fact that we separated the business from the building, and that business has its own value as well too, because the business is making money, it's got inventory, it's worth something on top of this value. So that gives you an idea of what we do with some of our properties. Now, going to another one. Let's see here. I'm all over the place. This property. Hopefully I'm still muted. Yes. Well, I'm panning fast. This is an industrial property. And let's see here. Sorry about that. We'll kind of start. It has 4 different spots that can be rented. And it was all vacant when I bought it. So what did we do here? It was really hard to figure out what the cap rate was because it had 0 income coming in. And it wasn't a 0 income property because that would make it worth 0. But we have to guess what we can rent it for, what the cap rates will be. So I paid $865,000 for this property. Now I currently have it rented. One spot is $2,000 a month. Another spot is $5,000 a month. We just rented another spot for $800 a month. And then we still have 1 vacant spot, which should be in $2,200 a month area. And I'm trying to think if I've got, or no, one was, hold on, I did that wrong. One was, I keep clicking the wrong button. 2,000 plus 6,000 plus 800 plus 2,200. 11,000 a month is what we'll be bringing in when it's fully leased. It's almost there now, not quite. Multiply that by 12. Gross, again, gross number. 132,000. At an 8 cap, that makes it worth $1.65 million. And honestly, an industrial property in that location is probably more like a 7 gross cap rate. Makes it worth $1.8 million. And the really cool part too is we have storage units where we can add a couple $1,000s a month in rent there if we do that, and that would make it bringing in $150,000 in rent if we do that. Now it's worth over $2 million. So that's why cap rates are important, because if you have properties like this, industrial, multifamily, even some mixed use properties that are residential and commercial, they're usually valued based on cap rates, local cap rates. And if you buy properties that need work or that are under rented, sometimes you can get them at a relatively low price, but using the cap rates and figuring out what they could rent for, what local cap rates are, you can project what it will be worth in the future. It also can help you figure out if people, if you want to buy properties that are already stabilized, already rented, do you want to pay for a 7 cap? And then you want to figure out, hey, are these expenses right if I'm using net, or if I'm using gross, is this deal worth it? Do I want to pay 8 cap? Do I want to pay 9 cap? Where do I make my money? Am I using financing? So there's all kinds of different things to look at. Now, I said I have other calculators. So if you're more concerned with cash flow, you can use our cash flow calculator, put in your rent, put in your mortgages, your loans, all your other expenses, things there, and figure out what the property makes per month. Cap rate does not use loans in any way. Loans have nothing to do with cap rate. They are simply more of your own personal thing. Cap rate is all about the property and the income it makes. So if you have a loan, you want to use a different calculator to figure out what you're actually going to make. So we have that one for cash flow. We have one for cash on cash, figuring out, hey, what percentage are you making on your cash once you figure out what your cash flow is. I won't go through all these. I have videos for all of these if you want them. And then the cap rate, we've got a fix and flip calculator, a BRRRR calculator, buy, repair, rent, refinance, 1031 exchange calculator, and our inflation calculator right here, which I want to talk about too. So this one's really cool because there's a lot of inflation calculators that will give you what $1960 are worth now based on what actually happened with inflation. And there's a few that'll give you the future based on like 2 or 3%. And there's a couple I found where you can enter, say, hey, 10% inflation for the next 30 years. I want to know what it is. We made one where you can enter your inflation rate for each of the next 30 years if you want to. And it will tell you what your money will be worth or what an asset will be worth if it appreciates at that same inflation rate. Really cool. So I can come in here 5%, 5%, 10%, 12%. We can say, hey, inflation's 9 right now. Next year's going to be 5. The year after that's going to be 5. The year after that's going to be 3. And go through and change all of these to whatever you want. And then at the end of those 30 years or 10 years or whatever it is, you can see that, hey, my $100,000, that's the starting cash we have here, in 30 years it will be worth what $20,000 is worth now. Inflation is crazy. And likewise, if I buy a house for $100,000 and it happens to go up at the exact inflation rate, you have some kind of asset that you know is going to follow inflation exactly, that will be worth $439,000 in 30 years. Now again, that's based on some high rates in here. It might not be that high, might be lower. You can change these to whatever you want to come up with figures you want. So that's our cool new feature. I did an inflation video last week. I would have been smart to include this in that video, but we didn't make it yet. I didn't have that idea until this, so now we've got it. All right, so we've got cool calculators. Lots of cool information on investormore.com. And yeah, for cap rates, very simple, very easy calculation in itself. The tricky part is figuring out what the cap rates are, figuring out if you want to use net or gross, and then figuring out what rents are as well, what the income will be. So while the formula is simple, all the inputs that go into that formula can be very complicated. That's good and bad. We've got some really, really good deals because sometimes people might not understand cap rates or the income or the potential of a property. And you can also see some properties extremely overpriced because it goes the other way too, and people might not understand what local cap rates are or what investors are willing to pay for on-income properties. All right, hope you guys enjoyed this video. Love to hear your comments, your feedback. Cap rate can be very important for income properties, commercial properties, businesses a little bit. They aren't really used on residential properties as much, but they can be to some people. They can be important for some people on single family rentals too. Depends on the investor. But you don't have to know cap rates as a single family investor as much. Usually most people are looking more at cash flow, cash on cash return, and that aspect there. All right, love to hear what you think. Love to see your likes, comments, shares, all that. We'll be back with many more videos, including walkthroughs of our properties and different things coming up here soon.